Hello viewers and welcome to NMN Vlogs. The topic of today's discussion is, are we cornering China or inviting investment claims? To begin with, China and India are at clash. China has already killed 20 Indian soldiers at the war front. Now, both the countries are trying to de-escalate the issue. However, the war is not only at the borders. Earlier, the war had already started at the trade front. On 17th April 2020, Government of India amended its FDI policy. According to the new rule, any Chinese entity which wants to invest in India has to first take approval and acceptance from the Government of India before investing in any Indian entity. Under the old regime, this acceptance was automatic and the Chinese company had merely to inform the RBI about so-and-so investment. The highlight of the amendment is an entity of a country which shares a land border with India. This definition per se includes Chinese companies as well, which earlier covered only Pakistan and Bangladesh. Centre has made another substantial change which is connected to paragraph 3.1.1 of the policy, and it reads, in the event of the transfer of ownership of any existing or future FDI in an entity in India, directly or indirectly, resulting in the beneficial ownership falling within the restriction purview of paragraph 3.1.1a, such subsequent change in beneficial ownership will also require government approval. Therefore, even the existing FDI from China has gone under serious change on the Indian soil. China has argued this amendment to be discriminatory as well as violating fair and equitable treatment. For your information, it's not only India who has amended its FDI policy in 2020, but the list includes countries like Italy, Spain, Germany, USA, UK, European Union, alongside Canada, and the agenda is to restrict China from making strategic investments in various countries whenever there is an economic meltdown. Since the issue is now open, let us first see Chinese investment in India. Chinese money is already present in India in a big way as strategic equity and debt in the large, medium and startup sectors. Indian companies like Paytm, Ola, Swiggy, Zomato and many more have large investments from Chinese funds. The estimate is pegged at $4 billion. However, the amended FDI policy came at the back of People's Bank of China raising its stake from 0.8% to 1.01% in India's largest non-banking mortgage provider, HDFC. In this way, the government wants to curb strategic Chinese investment in India, but then will it also give rise to disputes under India-China BIT? India-China Bilateral Investment Treaty. India-China BIT was signed on 21st of November 2006 and it came into force on 1st of August 2007. But the same treaty was terminated unilaterally by India on 3rd of October 2018 because India wanted to adopt its 2015 model BIT and on the basis of that enter into a new treaty with China. Now the question is, if there is no BIT between India and China as of date, where will the disputes come from? And the answer lies in Article 16 of the terminated BIT, which is a sunset clause. Article 16 reads, duration and termination, and the subclause 2 reads, notwithstanding termination of this agreement pursuant to paragraph 1 of this article, the agreement shall continue to be effective for a further period of 15 years from the date of its termination in respect of investments made or acquired before the date of termination of this agreement. Therefore, in view of this clause, the investments made by Chinese investors before 3rd of October 2018 under the 2006 BIT would continue to be in force until 2nd of October 2033. It implies that there is a potential of disputes arising out of 2006 India-China BIT in view of the Press Note 3 released by the Government of India, which amended its FDI policy. The investors can argue violation of fair and equitable treatment by the Government of India, which caused expropriation of their investments on the Indian soil. What is of concern is that such claims will be valid until 2nd of October 2033. Notably, if India loses, the cost involved is too high. This money is public money and is a burden on public exchequer of the Government of India. Therefore, India needs to be cautious of such claims and must try to avoid the claims under India-China BIT as far as possible.